ICT has acknowledged the secret London Killzone strategy with an 80% win rate. I'll be walking you through step by step everything you need to know to validate the trade setup, so let's dive straight into the video. So the first thing, which pairs? So GBP USD and Euro USD are the best pairs for this strategy as they're dollar correlated. However, GBP JPY also provides some clean setups. It shows up pretty much almost every single day. However, if it doesn't show on one pair, you should skip to the other and check all the pairs for the setup at this specific time that I'm going to show you in a second. To look for trades every single day. If not, then we've got plenty of other strategies. I'll be dropping some more strategy videos on the YouTube in the future, so you guys should stay tuned for that. So like and subscribe as well. So next thing, delineate the time window we're going to be trading. So it's 7:45 AM to 9 AM UK time, which is 2:45 AM to 4 AM USA time, and this is the London Killzone strategy. So it's only a 1 hour 15-minute window. It's not very long at all. So yeah, that's the time window we're going to be looking for trades in. We're looking for trade setups in that time window. The setup we're going to be trading is the liquidity sweep strategy. So we're going to look for liquidity sweeps off order blocks. So we're tapping into order blocks. I'll explain this on the charts. And then we're going to look for entries based off FVG and market structure shifts. I'll show you live chart examples near to the end, so stick around to the end for the live chart examples. And the time frames we're going to be sticking on are the 15-minute and 1-minute time frame. So there's no daily bias required. All you need are these two time frames and to follow this set of rules here, and you can find consistency in the markets with this strategy that I'm showing you guys. So let's get into the theory side first. So what you're looking for at 7:45 AM. So this is 7 AM, which I've marked out over here. This is just to show me where the setups are going to be, and we're going to probably just look at the markets at 7 just to see where the 50-minute structure is showing direction and willingness to go towards. However, you could literally just be on the charts at 7:45 and analyze from there. So let's see what on the charts at 7:45 right here. So 7:45 we open our charts and we're looking for the trading setup, and 9 AM over here. As you can see, I got the session indicator on TradingView to show me that. So we let price breathe. We let price do whatever it wants before 7:45, guys. So before 7:45, we allow price to do whatever it wants. So the ideal strategy for this, there's two variations to this. So ideally, what we want is to see an order block form somewhere over here in the discount of this range. So we can mark out our liquidity points as well, just like I've shown in the other videos where we were looking for raids on these liquidities. However, in this range, we want to look for discount and PD arrays. These PD arrays that we're going to specifically be looking for are order blocks. So let's say this order block's in discount before 7:45. What we can look for between 7:45 and 9 AM UK time is look for a retrace in to mitigate this order block, and then we can take the trade to the next liquidity high. So this is the easiest strategy, guys. And what we're going to do on the 15-minute at this point over here, when price is in between our time window and mitigating the actual order block, what we're going to be doing is we're going to be scaling into the 1-minute time frame to look for confirmations in this area to validate the trade. So in this area, what you're probably going to see is, what you're definitely going to see is price action like this. So we'll see a high, a low form for buys. A buy example. So we see a low form, then a high, and then a lower low. So what this lower low is actually doing is sweeping liquidity on the 1-minute, and then we're going to validate the high, the break of structure high, which is where we're going to look for the market structure shift from. So we've got the liquidity sweep, then we're going to look for the market structure shift, right? So liquidity sweep, then the order block, then we're going to look for the market structure shift right here. So as you can see, we're going to look for the market structure shift right here. And this is vital, this part here, guys, because if this market structure shift does not break this structural point over here with displacement, with power, with momentum, with velocity, with speed, and close above, if it doesn't close above, if it just wicks above, it's a low probability trade and there's high chance of this failing. So what we want to see is a break above, a strong closure above over here with a body closure, and then what we want to see is a retrace into the fair value gap, the extreme fair value gap, which would be over here in the discount area of this range. Now I'll go into this in more detail on the live chart examples, and then take it to the next liquidity area, the next opposing liquidity area, opposing PD arrays such as order blocks and FEGs, like I said, I'll explain these on the chart as they get a bit more complicated as we go along. But this is the first template. This is the easiest template over here. Now, the next template I want to show you guys is a bit of a trickier one. So let's say price has made a low over here before 745, and price also made a low here, which we marked out with our liquidity range, and we've seen a valid order block over here. What we want to do in this scenario is wait for price to take out this liquidity over here, and let's say it can do it for the opposing side as well. It can do it for sells over here. So imagine if there was an order block right here above this high, above the most recent high before 745 right here. So we'll do a sell example for this one. So let's say price takes out this point over here, takes out this high. What we're going to look for is, so this high has been taken out and now it's tapped into an order block. So the liquidity sweep's been completed, the order block's been tapped into. So now we're going to look for a market structure shift and a fair value gap entry. Also, in line with this order block, if there's a fair value gap in line with this order block, it's even higher probability, guys. So it's even more chance of it falling from here if we get the valid confirmations on the 1 minute. So this is on the 15-minute time frame, then we're going to scale down to the 1 minute time frame to look for more confirmation. So all we do here is look for the same confirmation. So you can see the liquidity sweep again on the 1 minute time frame over here. You identify a valid low over here, which I'll show you on the live chart example. Could be a fractal low, could be just a main low in general before the liquidity sweep. Then wait for the break of structure over here. We're going to mark this out in red as it's vital, this part here, and you guys know why. Then wait for a retrace into the FVG, take our trade down. This is where we find our entries over here based off the FVG found here. Place our stop loss above the highs, take the trade down to the opposing liquidity area or opposing PD array. Let's say there's an order block here, you can take profits here, but I'll go into that in more detail. So that's the more complex template over here. So the high before 745 gets swept instead. And also what price can do is price could make a high, for example, during the window as well. And there's an example like this, which I'll show you in a couple of minutes when we're on the live chart examples, where price can take the high out that's made even in the time window over here. And some people will get faked out with fake order blocks over here, right? They'll be thinking that these order blocks will work, and then these will get swept. Price will go straight through this area over here. Let's clean this up a bit. Price will go straight through this area, and then as you can see, trade overall does drop, however, from the correct order block, not the fake order block, where the retailers are taken out, guys. So remember, price can do anything it wants beforehand, but in our time frame, in our time window, which we delineated with this strategy over here, we're going to look for the trade setups and the trade ideas to validate this. So it's very rule based. You can walk through step by step whilst you're looking at the trade. And let's get into the live chart examples. Before we get into the chart examples, if you're struggling to pass your funded accounts and you keep failing your funded accounts, chances are you're not going to pass. Most traders blow $9,000 before they reach their first funded account, guys. So with this service, this automated trading bot will literally pass the funded challenge for you in under 30 days, 100% guaranteed. If you fail, you get all your money back, which means there's zero risk on your side at all. There's no risk but maximum reward, guys. It's literally for a very low price as well. As you can see, we've got loads of testimonials over here. We've got loads of good client feedback over here. The Telegram will be dropped in the description below. So you guys can definitely go check that out. But yeah, stop gambling funded accounts. This bot will literally pass the funded account for you. It's a guaranteed pass, so there's zero risk on your side. If you fail the challenge, which has never happened before, you get all your money back, 100% guaranteed, no questions asked. However, you'll definitely pass the challenge. As you can see, these people were funded in less than like 24 hours, guys. It's crazy. This automated trading bot has a 100% strike rate. As you can see, we've got loads of results over here, loads of testimonials. Make sure you get in before the places run out. Otherwise, you'll pay the full price, 2396, and you don't want to be doing that when you can get it for a lot cheaper. So it's only $5.50 right now. Message the Funded Faster Star. I'll drop the link in the Telegram description below. So you guys should definitely go check that out if you're struggling to get funded. And yeah, let's get back onto the chart examples. So the first example I want to show you was right here, Tuesday the 4th of July. And this was even on a bank holiday. This strategy worked, guys. So this shows you how bulletproof the strategy is. So let's rewind to 7:45. So as you can see, before 7:45, let me just draw it out with a red horizontal line, vertical line, so you guys can see the time window that we're going to be trading in. So let's say we're watching the 15-minute candle before 7:45. As you can see, price has broken structure over here, and price has left a nice order block over here. As you can see, this whole area is an order block. Why is this an order block? Because price swept liquidity before it over here, and then price broke structure over here as well with this displacement candle over here, and price after an order block. Now some people may think, okay, this is the order block as it's the last down candle before the up move, and yes, you can mark this out over here. However, this is high probability as this was made before price took out this liquidity leg, and this was made after. However, I can make a full video on the channel based on just order blocks and strictly just POIs and points of interest. However, for now I'm going to go through the full strategy, so just for video purposes, let's get it done quickly. I'll show you the entry strategy, and if you want, drop a comment in the comment section down below if you want me to be more specific and do a full in-depth video on order blocks themselves. So let's carry on. So now what are we waiting for? As you can see, price has also made a high right here. So this is our range overall. This low over here, this low over here to this high. However, after this high, there's no order blocks that have been created, and this is not a valid order block just yet as price hasn't moved away. So we're not going to be looking for sells. It's likely that we're going to be looking for buys. With no daily bias, we've already got a bias just on the 15-minute time frame. So let's play price out. Okay, price taps into the area. As you can see, price taps into this refined order block over here as well. So now we remember from the 15-minute, we drop down to the 1-minute time frame to validate this trade idea. Now, where is the last main high before price took out liquidity? So price took out the liquidity over here. The next fractal swing high, valid high, breaker structure high, whatever you want to call it. There's so many different names for it, guys. But it's literally, this is the high you're looking for it to break with displacement. Let's see if that happens. Okay, price closed above, that's the displacement, it engulfed. So now where's the extreme FVG in this leg? Where's the extreme FVG in this leg as price broke structure? That's the question you got to ask. So it's the lowest FVG in discount. As you can see, it's this candle's low to this candle's high. The candle in the middle, this is the FVG. And in line with this FVG, we also have a valid order block right here, given even higher probability and higher confidence for the trade, and high probability that the trade will actually play out. So what you can do is set your limits over here. You could place a stop loss below the body lows or below the full low. It's up to you, whatever you want to do. However you want to manage the trade. If you want to be more aggressive, you can put your stop loss here, or you can put your stops below the low. So let's see, and we go into the 15-minute time frame for our TPs. However, let me just show you how the 1-minute tags us in. As you can see, price moves away, giving people FOMO. We've missed the trade over here, and price comes back down, tags us in over here, and as you can see, this is why you should put your stop loss below the low fully, not below the bodies. And also, why should you not put it below the bodies over here? Because the FEG consists of 3 candles. The minimum you should be putting it is below the first FEG candle's low. So you can't really put the body stop loss over here. You have to put it below the low. It's only a 3.9 pip stop loss, guys. It's not big risk at all. So now target the opposing liquidity. Just let this trade play out over here. The price is moving away quite nicely. Check on the 15-minute. And as you can see right here, we've got this high right here. This is the first high. This is the second high over here. And this is the third high over here. Have we got any more highs on the left? Yeah, you got these highs over here. You got some more equal highs. So these could be your main liquidity areas, your main TP areas. So let's just see how far price runs. You could put TP there, TP here, whatever. The trade management is up to you guys. I've literally given you the full trading plan here. It's low risk to high reward as well. So let's see how this plays out. As you can see, price tanks up, then price ends up going to the full TP over here. For over a 1 to 10, it goes for 1 to 11, end up hitting overall just short of a 1 to 12. But as you can see, this is the main liquidity area over here, the overall liquidity area, and that was a 1 to 11.46 for that trade. Now the next example I want to show you is right here. So 7:45 is where we want to look for our trading setups. So what we're doing at this point, so as you can see, this is our trading window right here. So before price, remember I said price can do whatever it wants beforehand. So as you can see, price was made this high right here. Price has made a low on the left, yes. Price has made a low right now, okay. What has this low done? Price has taken out this low right here. What's price tapped into? An institutionally funded candle. Why is it an institutionally funded candle? Because it's in line with the order block as well. Right here, it's tapped into this order block over here. However, because it's not in our trading window, we would not have taken this trade based off the order block over here. And price is right here now. So we're not looking for a trade here as it's not in our time window. So we're waiting for the next valid order block to be tapped. Where's the next valid order block? So some people may say the order block's here. However, look at the overall range. This high right here is a liquidity high. Why is this a liquidity high and not an order block high? A high where we should look for sells below. Because look at the overall range. So if we just pull your fib out over here, right here, as you can see, this is just about in premium. So if you were to sell here based off this order block right here, right, if you were to say this is the order block, okay, over here, this is barely in premium. This is half in discount. So this is where retailers get stopped out. So we don't take trades over here. We want to be taking trades higher up in premium. And as you can see, we have this major order block area right over here that we can spot on the 15-minute. And if you want to refine this area, we literally just mark out this area over here, this order block area, and wait for a tap into any of these zones over here on the 15-minute within our time window, and then look for trades. So I want to show you how this order block fails right here and how this one works. So let's let the 15-minute play out. Okay, so as you can see, price went straight to that order block where people would be looking for sells from. Some people that took sell limits here got absolutely wrecked over there. And as you will see in a second, price will tank down from here because we have chosen the correct order block area instead of the fake order block area right here. So make sure you guys don't get faked out with this. And as you can see, price is in between our trading time right now. Price has tapped into our zone with this candle over here. So we're going to be looking for trades right now. So as you can see, this is the main order block zone, so we can just delete that for now. This is the refined order block zone. This is that liquidity that got swept, which is a bonus high probability trade for it to go down now. And as you can see, before this high was swept, you see this low right here was broken with displacement, engulfed with FVG, whatever you want to call it. And now in this leg question, in this leg, where is the extreme FVG which we take our trades off? It is right here. Right there. So what you want to do now is place your sell limits right there. Okay, as you can see, price has broken this with displacement, so following the rules, we just take our entries, right? This is the last FVG high. You can place stop loss above here, wherever you want, and then target the opposing liquidity. Now don't forget, because on the 15-minute, because price had taken out this liquidity here and tapped into this order block, there's a chance that it could go bullish now. So we're not going to be looking for the opposing liquidity right here. We're going to look for opposing PD arrays now. So now on the 1-minute time frame, you can see that this is you've got an order block here. We've got an order block right here. What makes this a valid order block? As you can see, this order block here is also in line with a major order block, which was made before price took liquidity over here with this low. And as you can see, price broke structure after it with displacement, so there's a high chance that price will return to this area to fill in this fair value gap and hit this order block over here. So we could literally just take profits at this order block over here, place stop loss just above this high over here, let the trade play out. As you can see, at this point here, traders will be getting FOMO, fear of missing out. So they'll be panicking over here, thinking that the trades missed them. But you've got to stick to your rules. As you can see, the extreme FVG is still working in this area, even when price is running away. Price still retraces to the area, wicks us in, and let's see what happens now. Price tanks down to this level over here. Does it go even further? Yes, as you can see, it goes even further to this candle right here, giving us just over a 1 to 5.5. So that's that trade done. And now another example I want to show you is right here. This is a buy setup now because I think we've done enough sells. 745 is the candle we're going to be trading. Okay. So as you can see, before 745 over here, before 745, price is doing what it wants, as we said before on the 15-minute time frame. We're sticking to our rules. Price has made a low right here. There's a high right here. However, we can see a valid order block right here that price could tap into possibly over here. and there's no bullish order block. So where's the next bullish order block? Below this low, we've got sell side liquidity, we've got sell stops. As you can see right here, we have the whole order block region over here. So what we could wait for now in our time window is price to go in either direction, and we'll look for confirmation in either direction. So we let the 50-minute play out. As you see, price tanks straight down into our first area over here. So then we go down to the 1 minute time frame to show you the entry. So straight from 15 minutes to 1 minute, sticking to the rules, guys. Over here, price takes liquidity out right here, and then price, this is our structural point. Why is our structural point? This was made before price took out liquidity. This is a fractal high, it's a swing high. Each candle on the left highs are lower, on the right is lower. This is the highest out of the 3 candles. Out the mid, so the middle candle is the highest high, and also we're looking for a break with displacement. We want to see some momentum with this, because if banks are entering here, there's going to be displacement. It's not going to be a wick break of structure, no. It's going to be a body break of structure. Okay, so now as prices move down, where's the new liquidity? Where's the new break of structure area, and where's the new liquidity sweep? So if price keeps running away from you, you keep tracking it. As you can see, price smashed through this break of structure level over here. Price smashed through this break of structure level with a body with displacement. That's a valid market structure shift. Now in this leg over here, where's the extreme FVG? It's right here. We take our entries right here. Stop loss below this low right here. Now you can TP at the opposing PD array, or depending on the 50-minute time frame, we can take profits at liquidity levels. I'll show you that in a second. So as you can see, traders are getting FOMO at this point, fear of missing out, and then price taps into it over here, runs away nicely, and now where do we target? Okay, we've got an order block here. However, this was disrespected as we're equal highs above this high, which we marked out with this sell side liquidity, buy side liquidity high. We've got Asian highs right here. We've got these highs on the left right here. So as you can see, this high over here. We've got this high over here. We've got this main high over here. You can really, it's up to you where you want to target. However, I'm showing you multiple TP levels. As you can see, price is wicking this area over here. So you could have comfortably got out over here, or just basically literally just a 1 to 7 over here at this first liquidity area. Let's see how price moves. Okay, as you can see, those news on this day, so you'll be getting out before that. And as you can see, just basically just after 9 o'clock, which is our time window, price smashed the TP over here. So if there's news that day, you wouldn't really be trading, looking for more liquidity levels to TP at. So as you can see, there's a trade on the 1 minute over there, following the system. And yeah, that's all for today's video. So remember, follow the rules, stick to the trading plan, trust the process. And I'm going to bring these rules back on just to remind you. So we're looking for the liquidity sweep, order block and FVG to tap into it. If possible, if these order block and FVG are together, it's even more confluence. The market structure shift, that 1 minute high or low has to be broken with displacement, with momentum. And yeah, if you're struggling to get funded, remember guys, check out this funded fastpass service. The automated trading bot will pass the challenge for you. It's guaranteed. You could be funded 6 figures and you will be guaranteed a funded account, and literally you could literally get it in under 72 hours, and you could be fully trading on it, guys. You could be funded up to 200k and taking these trades on live accounts and making real profits. No demo profits anymore. If you take action, the money is there, the profitability is there. You'll be paid back for all your experience, all the time you put into your charts. You could be paid back for it. And remember, most traders fail and lose $9,000 before they're funded. You could be funded guaranteed, guys, without losing this £9,000. Compared to a $9,000 or £9,000 loss, you could put a $500 investment in and be funded over 6 figures, over 100,000. And think about it, just 1%, just 0.5% on a 100k account will pay you back for everything. As you can see, man of your word, can't find people like this in the forex industry. Fully appreciate it, guys. These people are changing their lives for the better, because they're putting a 0 risk investment in and getting funded 6 figures and actually taking action. So you guys could be doing the same. So that's all for today's video. I hope you guys enjoyed it. Drop a like, comment, subscribe, and I'll see you next time. Good luck.